All right, we are back with the mechanics of money, and this time we have a guest with Joe. Joe, thanks for coming on.
Yeah, thanks for having me, Sam. I'm looking forward to it.
Yes, in here. So before we dive into it, why don't you break down a little bit of your business and kind of what you're working on today?
Sure. Yeah, I have two main businesses of how I produce active income. The first is a real estate wholesaling business, which is essentially the process of finding off-market real estate deals and contracting those properties and selling the contractual interest to an investor in the local market. We do that in, 10 to 14 different states, turning deals every single month. The second business is running Google Ads and consulting for real estate wholesalers, the exact niche I'm in.
Got it. So break down kind of where that market's at today, right? I feel like you look at a lot of headlines around real estate in general, right? Things are slow. There's a lot of transaction volume, especially in residential, right? And when I think of wholesale, I think there are people flipping single family homes. So
Totally.
kind of walk me through like the typical demographic in terms of the area you're in, the home prices, and kind of how that market itself has been the last while. Because I feel
Sure.
if you see all these things around headlines of transactions are down, I feel like in your business, transactions down is not a good thing.
Yeah. So here's what I'll say. One of the reasons I love real estate wholesaling is, for a colloquial term, you're never caught holding the bag, right? You're not building, you're not flipping, which means we're never getting caught in any of these market downturns. So you're right. Like MLS volume is the slowest it's been, I think, in like a decade. The nice part about wholesaling is you can kind of adapt to whatever market conditions you're in. So, like for us, there's a couple different strategies people use to exit deals. Sometimes people will post their deals to the MLS. Sometimes they're trying to find like an off-market investor. Flippers, for the most part, are going to keep buying and renovating properties. So if you buy a property at a deep enough discount, there is always going to be a market for investors. And so we've actually continued to grow through this entire slowdown, we'll call it, over the last 12 to 18 months, just because we're staying dynamic and moving through it, which is one of the reasons I like that business model. Now, another reason we stay flexible is we've closed in 31 different states before, right? So like the Northeast right now is not nearly as slow as Florida and Texas. So when that happens, we'll just turn up our marketing in those states and be able to do more deals in better markets.
Sure. And, I feel like with wholesaling too, people sometimes look at it as a way of like, this is a great way to go break into real estate. But if the people who look at it from that point of view of, I'm brand new, I'm looking at wholesale index, active income, and I want to go hold properties myself. Like, how do you think about this on your end? Because you have a much bigger business built out around it. Right. It's
Sure.
like most people stop at that initial phase. They want to go make a few bucks, replace some income, but very few get to the stage that you're at, where it's actual business with systems, process, people, etc.
Sure. Yeah, I wholesaling is notorious for what you described, right? There's a lot of grifters and gurus out there selling cheap courses about how you can make your first $10,000, $15,000 wholesaling real estate. And I do believe that it's one of the few business models where you can make well above average amounts of income just from a ton of hard work, right? Like there's no capital requirement. Now what happens with that is there's a lot of, like, I would call it beginner competition of a lot of rookies running around trying to do deals. And I think it's a great business to make your first 200-300 grand a year. Now it's painful until you scale it up. Like it's hand-to-hand combat every day. You're on the phone with sellers, you're on the phone with buyers, title companies. It is painful to say the least. And so I think as I started getting into it, I think any business model that you see other people making money at can be scaled to virtually any level, right? Like there's wholesalers who do, you know, 10K a month, and there's New Western who does, hundreds of millions of dollars in revenue a year. And so there's versions and models of every business. And I just think, for me, I'm a big believer in, if something's working, why change it? And so, like, as I started getting good at wholesaling, I was making 10, 20, 30, 40 grand a month by myself. I was like, how do we just build this to scale? And so I think I just stayed committed to it, which, again, I know we're not necessarily talking about like the principles of the stuff, but like I think that's a big part of building businesses, is just sticking with something long enough when everyone else is like, well, we can't scale this. I'm like, well, we could. Everyone just tells us we can't, but if we can figure it out, we probably can make a bunch of money.
Dude, I feel like that's such a big thing too, is that I think what I've realized over a long period of time is that you focus on one thing for a very long period of time, you will likely make a lot of money doing it. That
Totally.
upside likely has a factor based on the industry that you're in, right? But if you are committed to one single thing for a very, very long time and get extremely good at that one thing, the likelihood you'll make money, you'll also then become known in that one area, right, as the go-to person for that, right? I think that kind of bridge into your next business as well too, is that my guess is that you built this business, started successful in it, saw things in your business that you can go replicate, and now turn into an agency around it as well, right?
That's exactly right. You get paid in massive disproportions to being really good at like one niche thing. And so I think, especially with social media, like especially for like our generation and the people 10 years younger than us, there's so much shiny object syndrome, right? Like I see you, you're like raising money, doing all these big deals. It's really tempting to be like, well, I want to go do stuff like that. Or we see one of our other buddies, I don't know, doing whatever, buying an apartment building. It's like, well, I can do that. People probably see me who have a successful business like, well, wholesaling sounds easier. The grass is always greener, but it's fertilized with manure, right? And so, like, I think as entrepreneurs, we have to stay focused on just our lane. And you're exactly right. Like, what happened with me with the wholesaling is I just kept getting good at it. And then as I started scaling, a lot of people were like, oh, we didn't think you could really scale up a business like this and have it be an asset and not have to work in it. Cause I really spend very little time in the wholesale business anymore. And so then that built like a little bit of brand notoriety within like my micro niche of wholesaling, which then allowed me to start SM3 Marketing. And we're scaling so much faster than all the other like agencies in our space because we have a really authentic brand and we're credible because we're like, hey, we're actually doing this. Here's our book, like here's what we're doing, and people respect that.
So walk us through numbers in wholesaling, right? Like break down a typical deal that you do in terms of, the cash to go lock it up, the spread you may have, what that process looks like in terms of like different end buyers, walk just like all the numbers around it.
Yeah. Our average deal size is just under $30,000. So the average revenue to us per a deal would be 29,500 to be specific. And so what that looks like is we may put a $300,000 property under contract. You hear a lot of wholesalers playing in like the super cheap markets, right? They want to go after the 100K, the 150K houses. I find if you go after more expensive homes, obviously you can hit a bigger spread on what you're able to assign your contractual interest for. And so, we've done assignment deals on $2 million houses and small apartment buildings and things like that. And so, yeah, the average deal we probably put under contract for say 300 grand and we'll assign it for 330 to an investor. And so like for anyone who doesn't understand what that means is like we have a purchase and sale agreement with a seller for 300,000. And we have the contractual rights to assign our contract, which will find someone in, say, Tampa, a big house flipper. They do 20, 40 house flips a year. I'll be like, hey, man, I got a deal. It's worth 450 when you finish. You're going to have to put in 50, 60 grand, and you're going to be able to make 50, 60 grand. I want 330 for it. I then write a second contract called an assignment of contract that assigns my contractual interest in that deal.
And then so in that given deal too, like how much cash do you that at one time for a given deal like that?
No, I mean like the earnest money, so $500 to $2,000, right? Whatever your earnest money is, that's all you have out for a wholesale deal.
And that's all refundable too, I assume.
Yeah, it's all refundable. Yes, for the most part, it's all refundable.
Got it. Yeah. Now it's interesting too because I feel like most people you talk to like don't do that kind of volume. You're doing what 4 or 5 a week on average.
Closings.
Yeah, like we kind of look at your whole portfolio itself, like on average, like a week, how much you guys doing in volume?
Yeah, I mean we're locking up. We've grown quite a bit, so we're probably putting like 10 to 15 houses under contract a week right now. Maybe, yeah, like 12 to 15 contracts a week right now we're putting under contract. Now, here's the thing. That doesn't mean you're closing 12 to 15, right? A third of all those deals are going to have title issues because we're dealing with high distress situations. So a homeowner might call us, they got a house for 400 grand. They're like, my mortgage is, 350. Cool. We'll buy it for 400. And then we get the payoff back and they owe 420 and the deal's dead. So do you lose a good chunk of deals that way? I would say like a good, healthy wholesale business should probably close like 50% of the deals they lock up.
Got it. Yeah, makes sense too. And for you guys too, if you basically the only thing you lose in that scenario too is just time, effort, energy around the actual deal itself. Like your probably cash outlay on that play isn't huge.
Yeah, it's none. I mean, it's virtually just marketing costs. Like wholesaling is like it's not really you're in real estate, but you're just running a sales and marketing company, right? You're not taking title to these properties. You're not doing any renovations. You need very little real estate knowledge and yeah, like to me, I'm in a sales and marketing company is essentially what it is.
Cool. And kind of walk through how now you like play into more of the social media side too. Like you just hit 100K reached on Instagram, right?
Yep. Yes, sir.
Yeah, that's awesome. So kind of walk through how like you leverage that to play into both the wholesaling business, but more so the agency as well.
Yeah, social media is incredibly powerful. So my entire wholesaling business is built off of Google Ads, right? So like my superpower that I found in the business is I got really good at paid advertising. And so that's what we do for SM3 Marketing, for other investors. We have a ton of data. And so when I always wanted to post on social media just because I understood the power of it. I think like having a personal brand is, can't really be AI disrupted. Like I think it's a very important thing for everyone to be doing. I waited for a while because I wanted to have certain credibilities. I wanted to have an 8-figure personal real estate portfolio. I wanted to be making well over 7 figures net to me a year. Like I had a couple things where I was like, if I get here, I feel like I have the credibility to share at
Sure.
least at my like first level. I call it like first level rich, right? And so I waited and then I just put together a content plan. But yeah, it's like to me, I spend I wouldn't say most of my time. I spend at least a full day a week working just on content. And because I just think it's so incredibly important and it's helped with SM3. And I don't even know all the future uses I'm going to use it for, but I know it's incredibly important to have.
Totally. And let's go back a second too. So you mentioned first level rich.
Yeah.
What are the levels you look at and kind of what are those benchmarks for you and think about different levels of it?
Yeah, sure. So if you work your way up, obviously you have like in debt, not a fun place to be, which I've been there. Like I was very close to actually going like claiming bankruptcy. My second ever house flip, I went really upside down on while I was working still a W-2 job, ended up getting fired and was like $100,000 upside down on a hard money loan. And so I've been heavily in debt, which is like the worst financial level you can be at. So that's like -0. We'll call that -1 to
For
get
sure.
back to not having debt. You're at level 0. And then I think, getting your income to say like 10 to 15K a month, I would say is like the first level where you can kind of breathe again. You're not like getting rich. You're not wealthy, but you can survive. Like when my business was making 10, 15,000 a month, I was like, oh, like I can do this entrepreneurship thing. I don't know if I'm going to, be flying private or anything like that, but I can at least survive. To me, that was like a big level. I was like, okay, like we can make 150 grand a year doing something that isn't a job. We have like reached a little bit more level of freedom. I think the next is probably, like people say, obviously, like becoming a millionaire. To me, really 2.5 million is like the real mark where like 2.5 million liquid is where I started feeling like, oh, like I feel like I'm at like that first level of actually like financial freedom because 2.5 million, you're gonna make what 90 to 140 grand a year on that 2.5. So you're like, okay, I could live a pretty healthy upper middle class life and not have to work if I didn't want to. And so that was kind of like what I call like first level rich is your assets would be able to pay for a normal life. Again, you're not buying crazy watches or anything like that with at least your passive income or your
Sure.
asset income. But yeah, that's kind of how I would define that. And then, just trying to figure out what the next couple after that are. Here's the other thing I'll say like about net worth and income, which is an interesting thing I'm experiencing. And you're probably in a similar boat. I think anyone young who rapidly scales their income, the net worth lag. Like if you called like my Merrill Lynch financial, advisor and asked what is the average net worth of say someone who makes 1 million net income a year, right? Their average net worth is probably gonna be way higher than what me and yours net worth is right now because we haven't had the years to start compounding because we've scaled our income so quickly.
So I think that depends too, right? Like I think mine's a bit different in that sense where my income is much more lumpy, right? And looking at the actual dollars behind it from doing deals, like the last like 12, 18 months, if I made very, very little money in total, because it was going out and building certain things, I'm sure you've dealt with too.
Sure.
Well, there's certain phases you go through where you're building things that can be very, very big or things that can either have an exit, things that you can go move yourself from after a period of time to and still pay you very well, right? Basically getting to that place where you first boulder uphill, then you start going downhill and that becomes exponentially more versus time you're putting into it. So balance sheet though has actually been really impactful overall but the cash piece of it's been really tight where like taking cash out of those companies. So in
Mhm.
turn, mine's had the opposite right now. Again,
Yeah,
that's growing pretty quickly. The cash component, I have to go keep way more cash on hand now to feel comfortable because the income is future income that is hopefully far better for making that short-term sacrifice of it. So I think there's different feelings of rich too, right? Like having really good monthly recurring income, you may feel more rich than someone who's worth way more than you because that is repeatable and predictable. Whereas like you have that conversation with say a founder who exits for 20, 30, 50, $100 million, right? They may feel broke because they're making no money again and you kind of gave up your vehicle. So
yeah,
again, great problem to have, but different scenario.
totally. And I think you hit the nail on the head. Our routes are different in that I have focused on very high cat like monthly cash flow producing businesses. And it's funny, I was talking to one of my buddies who's a syndicator, and I feel like pure blood syndicators have this exact problem you're describing, right? Where like their balance sheets are growing massively, but like they don't have a ton of free cash flow. I have found I love having a lot of monthly cash flow. Like it just makes me sleep really good at night knowing, we can make $100,000 net to me next month. Like that makes me feel just at ease and gives me a level of peace and security.
Well, it's also then becomes a play too, where for you, right, for the people who have like the bigger balance sheet type functions, investing becomes a secondary priority, right? Because it's almost like, hey, you have to go survive to get to that place of the bigger exit. So in turn, your cash, right, speaking for myself too, way more of my cash now is in cash and private credit than normally would be because I can go take, private credit's paying me a ton of interest right now. So I can go live off of that instead.
Sure.
Whereas someone who maybe more like yourself that's focusing on your business already paying you, right? Printing cash for you. So in turn, you're like, okay, I have to go invest for the growth period of it, right? Because the business itself may not have that same exit pop or valuation grab
Exactly
by
right.
the future, or it's like that balance then depending where you are.
It's exactly right.
So it's interesting too. So let's talk the investing side now. So you have the wholesale business, where you have the agency, right? Kind of talk through the investing strategy now too, of like where does that cash make each month go?
For sure. I will, for anyone who listens to this, I will tell you, I am probably not the best investor I have learned. Like, I seem to be pretty good at building sales teams and running marketing. Like, that's what I seem to enjoy and gravitate towards. So, right now, I pretty much only invest in like three places. I do LP deals, where I'm a limited partner, where I'm investing in another fund or syndicator buying a apartment deal or mobile home or assisted living. Those are kind of the three buckets I'm in right now. I then buy my own rentals, which I used to buy like smaller apartment buildings. Like I have a 28 unit, I have a 33 unit. I have now swung back to really enjoying buying single family homes, which I literally yesterday watched your video talking like like saying it like single family homes are not as good as bigger deals. But it's funny, like I think just because of my access to the single family home deals with my wholesaling model, like I can just what is now happening is we're like, if we can make $100,000 on a flip, let's just burr out of it and buy, renovate, refinance out of it, instead of taking that income. Because like as you said, my big problem is shielding tax every year, because when you focus on building a lot of you know free cash flow, you then have a massive tax liability. And so, yeah, so I've swung back to doing single family homes, and then I'll just buy ETFs, the stock market, and just keep that super simple.
Well, the single family homes for you, like you have a unique advantage there too. So I think a big point about single family is that it's one of the highest, if your time horizon is long, it's one of the highest likelihoods of becoming, worth $5, $10 million over a period of time. Just from doing those, obviously, for making more money and getting better basis in these deals, that can grow much more quickly.
Exactly.
Most people doing single family homes are not doing that, right? So for
Totally.
you, what Joe is saying, like the tax play here is huge, right? You go buy a house for 300K, that's worth $400,000, right? You fix it up, maybe buy in cash, but maybe you lever it, right? So in turn, that house likely can depreciate 120, right? Year one. So in turn, if he can go hold that for 6 months, fix it up, get an appraisal of $400,000, pull back out 300K, so you have no cash into it. And in turn, he will show a negative 120 that year for depreciation that he can go use to offset other income due to rep status, right? So that's a
Exactly.
huge, huge tax play. and that money then cycles. So if you have unique deal flow, a great tax strategy there too, like that is a great way to go keep way more of what you're making.
That's the other reason why, like, especially for real estate people, I love, preaching the wholesale model. Cause I say, guys, like, you're also building your own competitive advantage for deal flow. Right. And so, like, what Sam's hitting on here is I'm not just going and finding these houses and buying a single family home off Zillow. They're seeing my ad, they're calling, and they're like, dude, I got to sell this thing in 2 weeks. We're getting amazing deals on these, which give us that competitive advantage. I also, the other thing I'll say, I really like the liquidity of single family homes, right? Like, for example, I have a 33 unit, totally messed up on the buy. Like, I just bought a bad deal, right? Like, I paid too much. And some investors don't want to come on social media and admit that shit. I'll say, I don't care. Like,
Sure.
I bought a bad deal. And, the last 18 months, all your multifamily investor friends will tell you it's probably not a good time to go try and punch out of a deal. Right. And so, like, you have a lot more, it's a lot harder to exit those kind of deals. The single family homes, you buy a bad single family home, cool, you punch out, like, it's a lot easier to trade. And so what I'm doing to kind of bolt onto my business, and this is a newer component we're doing, we brought in like an in-house who sits in our office all day, property analyst. And so all he's doing all day is just looking at our own wholesale pipeline and say, hey guys, this is a good rental. Hey, this is in the markets you guys like, where we're able to systematize, in my opinion, the single family acquisition, which, again, people like, you can't scale. I'm like, well, again, okay, another thing. They told me I couldn't scale wholesaling. I have the access to single family homes. Maybe I should try scaling it because I have a competitive advantage there.
Sure. No, it makes a ton of sense too. And also the advantage you have allows them to be more liquid. So if a property is worth 400K and you're paying 320, 300, right? You basically have the I need out delta in there, right? Because if you look at it, say, everyone uses 20% as like the fire sale cost, right?
Yeah.
And if your fire sale cost is 20% below market, you're paying 25% below market. You can sell transaction costs and sell it yourself and get out of their break even.
Can I curse on here?
What's up?
Can I curse on here or no?
Yeah, go for it.
I call it the I fucked up cushion.
Yeah.
Right? That's exactly what Sam is talking about is, oh shit, I fucked up. Then you got that cushion in there. So I literally talk about that all the time. I'm like, well, I want to buy such good deals that even if I fuck it up, I can still get out and get my money back.
Yeah, that's a huge component of too. Yeah, they're effectively liquid, right? Like, there's way more single family buyers between investors, actual families living in them, right? All those things, you can go sell a property much more easily, especially if you have that level of delta too, right? Where these bigger deals, they also trade much closer to what they're actually worth, right? Which is tied to interest rates, tied to market cap rates, right? If these bigger deals say $10 million plus, right? And they're worth $1, they're likely going to trade between 98 cents and $1.02 all day long. In these single family deals and maybe small multifamily, they're likely going to trade from between 75 cents to $1.25. So your variance in them is so big in terms of both buying on the low side, hopefully selling someone on the higher side as well.
I couldn't agree more. Like, what you just described is why wholesaling real estate exists, right? Someone who owns an 100 unit B-class property, even if they're fairly unsophisticated, the likelihood they're going to fire sale this at 50 cents on the dollar, low, right? You got like, I'm thinking of a deal I bought in St. Pete. I bought this house. It's probably worth 400 grand. I had to put in a little bit of work. The thing was destroyed, roof caving in, like, gnarly situation, but amazing neighborhood, right? That person can simply not pay the mortgage, right? There's no way a non-investor is able to buy this thing. And there's water pouring in. She's got to close on this thing in 2 weeks. You're going to buy that thing for 40 cents on the dollar if you have the cash liquid. You're not going to find those deals in the bigger multifamily space, at least in my opinion.
And you also have the other side of it too, where if you look at single family homes for someone who's going to go live there, that is not a financial decision usually. That is an emotional purchase, right? If you have a husband and a wife and a kid shopping for a house and the wife wants the house, that premium what the husband will likely pay, there's some value there too that you can go extract for scenarios like that. Right, rightly less so in the $400,000 range, likely more so the $1 million, $2, $3 million range at home prices. But there's usually a premium people will pay if it's the house they want, because that is less so a financial decision. If it's financial, they'd go
because they love it.
Yeah,
I agree. I couldn't agree more.
And then you rent, I assume, right?
Yeah.
So kind of walk through that. I have strong points of view there. Kind of walk through your thoughts around rent for zoning in terms of where you live.
So if you're Like it depends on obviously what journey you're on. Like if you're building your income in your business, I'm a huge believer in renting unless you can buy a duplex or triplex and house hack. Like house hacking is what I did for years, and it's an amazing way to keep your living expense down. I'm huge posting about content on this. I'm like the most anti flexing proponent person on social media because like I think it's done such a disservice to people in their 20s and 30s trying to build financial security for themselves. Like flexing is
Dude,
just
I live in Miami.
yeah, like every half of every supercar you see in Miami is not owned, right? It's just like the most ridiculous flexing. And so to me, unless if you can house hack, that is an amazing. If you can house hack or buy beaters and live in them while you renovate, I get that strategy, right? But for me to go buy a $2 or $3 million home right now, right? I got to put down $700 million. Why would I do that? Like my velocity of capital, just investing into just my two businesses. I don't even have to talk about buying any real estate. Just me spending more on ads next month is like significantly faster of me increasing my earning capability than me buying a home I like. I also just think renting is like the rent to price ratio of like what I can rent for say $6,000 a month right now versus what I would buy this same apartment for. My mortgage and PITI would be way higher than 6,000. Like so yeah.
Yeah, I think the same thing all the time too. Like mine's similar. So I'm in a condo here, and I probably have $200,000 into the house or like into the condo, and then my mortgage, including HOA, including taxes, insurance, or all those things, probably 60% higher than I'm paying in rent today. And then you also have the okay, I'm not going to live here long term type scenario. If I'm going to eventually want a house at some point, or eventually want to go move for whatever reason, then you have the 6 to 8% transaction cost when you go sell it, and the fact that you may not get the same value you bought it for as well, right? So if all of
Totally.
those things just make your life a way bigger hassle until you're able to go have like that one place to live in for a very long time.
Yeah, I couldn't agree more. Now the thing I'll hit on here for anyone building financial security, house hacking is amazing. Like I did that. I bought a duplex, renovated it, created equity, refied out, put a renter in there. I was not living lavishly, right? But like my living cost was so freaking low that I could invest so all of my free income into continuing to grow my business and buying rentals.
Yeah,
So if you can house hack, that's the move.
cool. I like it. And so now let's kind of shift gears a little bit too. So on actually spending money, right? If you're going to go out and think about it, like what are the top couple of things that you've spent on that have actually dramatically increased the quality of your life, and what are things do you choose not to go spend on?
Yeah, that's a good question. Food dramatically increases your quality of life. Like being able to eat whatever you want. I also just love eating. Like I love steak. I want to eat high quality food all the time, sushi. I mean, like for me, I remember when I could barely, like if I was eating Chipotle more than once a week, I was balling out, right? Like I had a lot of money if I was able to eat Chipotle. And so for me, food dramatically increases quality of life. Being able to pay for dinners for friends and family dramatically increases. Like that is a direct correlation on happiness. If you can take people to a badass steakhouse that they wouldn't normally eat at, and you could foot the $500 bill like it's nothing, that dramatically increases happiness from spending money. The shit that I've found zero fulfillment in is like cars. I've been like close to buying some stuff I probably shouldn't buy, and I've kind of kicked the can down the road. Watches, like I like watches, and I would like to buy more, but like it doesn't actually make you happier if like you buy it and it's cool for like 2 weeks while you wear it, and then you just scroll on Instagram and you're looking at the next one that you want. Um, I'll say while I'm a proponent of doing this later, increasing like where I lived, I would say increase my quality of life more than I had realized, but I would still tell people to delay it. But like that's where I find value in the money is being able to live somewhere where I can look at the water, have a great view like that. That I would say makes me make more money.
Yeah, I like it. Yeah, I mean, mine's pretty similar too. You can think about it, right? The food, trainers, right? I think the one thing that I've gotten to as well too is the place where you live is, especially working from home, right? It's such a big piece of it. I think a lot of other things too that they move the needle a little bit, but not in the way in which it's going to go. It becomes a Richter scale, right? If you spend way more on those things for a very marginal type increase. So I think the place where you live is definitely a big one, and the experience with people is always valuable.
I totally agree. Yeah, being able to like do fun stuff with people is the highest return. Like vacations, I would argue you do actually get a return on your money, especially when you bring friends or family. Like to me, the richest I've ever felt was like sending my mom and sister on vacations. Like that's was like the most gangster I ever felt with money, more than probably anything I'll like buy that's physical.
Cool, dude. I like it. Before we wrap up here too, where can people get hold of you?
Yeah, you can follow me on Joe Potenza on Instagram, Joe Potenza 4.
Cool, Joe. Thanks for coming on.
Yeah, thanks, Sam. Appreciate you.